Hello, everyone. Welcome to this Wednesday episode of Zero to One. If you never joined us before, Zero to One is a weekly event that we run for Doer Circle members and sometimes also those who are new to the community, which are really just kind of huddles. We get together, we share ideas, best practices, we feature stories from, inspiring founders or those who are maybe treading a solopreneur path, or just tips on ways that you can maybe do better from a lead generation point of view or personal branding. And we're really excited this week because there's a topic which, might not be the sexiest on paper, but is absolutely necessary if you're a founder growing a business, or if you're also somebody who is thinking about where to establish yourself to maximize your opportunities as well, and so the topics this week is around things to do with accounting, to do with taxes, to do with finance, and we're really excited to have Stefano here, who's CVO for Monks and has got a rich background as an entrepreneur himself, who's going to share some of those insights with you. So Stefano, maybe if you just first jump into a little bit about yourself, and then we'll get into the slides, or do you want to just jump straight into the slides? We'll take the
Yeah,
lead.
hi everyone. My name is Stefano, um, and I'm the CVO of Monks. CVO, not CEO, but CVO means Chief Visionary Officer. Uh, I do very much think that leaders in our new world of entrepreneurship, they need uh, CVOs as much as they need CEOs. CEOs, they execute, CVOs embrace on a vision, all right? So why is it related to taxes? Is because where you're gonna set up your next venture, it's how you envision the future. Where is gonna be your next big place? And as Jamie mentioned, maybe taxation is not the sexiest. To me, it is one of the sexiest things. And there is a reason why. First of all, as a vision of monks, we want to create the sexiest, funnest, coolest accountants with a very sturdy background. Every one of our team is extremely experienced in big companies, big firms, but most importantly, they are cool people and they really support clients from day one, and they embrace the mission of the client, not with the detachment of the normal accountant. So for us, being accountant is a mission, is being monk. You know, monks like the monks, they're loyal, they're quiet, they're wise. This is what we represent. We do
Love
things
that.
properly, but we find smart solutions. Choosing the place where you're gonna be in your next startup, it might hinder or elevate your evaluation from 0 to 50%. You know how a company is evaluated, right? You know, to do a free cash flow evaluation, this is finance 101. The discounted cash flow, what is the cash flow? The cash flow is what is the EBITDA plus minus adjustment, then we'll give you the free cash flow at the end of the year. You do projection. Now, taxation will infect your profitability. So if I'm taxed at 30%, 40%, 60%, 12%, 10%, 1%, this will affect your valuation proportionally. So if I choose a jurisdiction where I'm taxed at 40%, almost like many jurisdictions in Europe, although they might be beautiful places for startups, your valuation would be like from day one minus 40 compared to valuation of companies that are created in Hong Kong and Singapore. Nobody thinks about this. Oh, it's a beautiful ecosystem in San Francisco. I'll go pay taxes there. All right, you insist. But, you know, more and more with distributed teams, it's irrelevant where you're gonna set up your company, right? And there are things that you need to really take care of and put attention on. Now, number one, tax is sexy. As sexy as increasing the value of your startup from day one. Nobody thinks about this. Now you have your monk that is going to explain to you. That is the real truth. Now, think of a world where the team is distributed. So usually you pay taxes where your company effectively is. But say one person is in Minnesota, one person is in Japan, one person is in, I don't know, Indonesia, Bali. Now everybody's going to Bali. You know, it's all cool and stuff. They work in the morning, you do yoga in the afternoon, they fast until 3 p.m. You know, the new world biohacking thing. Yeah, everybody's distributed now. Where is your company tax? So first you say company is in, say, the US. By definition, it will be taxed in the US. But instead, indeed, taxation is where the administration is, despite the physical location of the company. Now, this is an important thing. Maybe we can go to slide 1, okay? Why I like very much Hong Kong and Singapore, okay? Hong Kong and Singapore are two jurisdictions that will allow to set up companies very efficiently, to raise capital very efficiently from many sources because they have double taxation agreement with pretty much everywhere in the planet. They are reputable jurisdiction. They're not like foggy, you know, like the typical BVI, Cayman Island and stuff like this, which is still used, okay? But it's very complicated to open bank accounts these days for very obvious reasons. Now, both jurisdictions are great. The only small difference is about the local director, which Singapore requires. Some more or less restrictive rules on crypto businesses, right? But they are pretty much equal. Now, let's say that you have a company in Hong Kong, okay, and you spend a good amount of time in Hong Kong. The administration is in Hong Kong. Administration means like who takes the decision, okay? You are fully taxed in Hong Kong. And that's great. Good news for you. But you can actually even apply an offshore claim in Hong Kong at the condition that there is nothing going on in Hong Kong. You only have bank account and address, and you do business from somewhere else. Now, that's the tricky part. If the administration is the boss, if the head is in Italy and spent all his life in Italy and has a company in Hong Kong, the Hong Kong company will be treated at Italian rules. Because remember, taxation is where administration is, okay? So if you administer a company from a place where taxation exists, you might be imposed of taxes. But if you play smart, it's not even saying play smart would be almost sneaky, you know? But if you plan properly, you can spend a good time of your life in a tax-free jurisdiction, say Dubai, say Thailand, where you only tax if you repatriate the capital. So say, for example, you spend 4 months in Dubai, or 3 months in Dubai, or 2 months in Dubai, 6 months in Thailand, and only 4 in Italy. All right? And you have the center of your vital interest, say in Thailand, because you have your villa there. How much taxes you will pay in Hong Kong? Probably 0, because you can apply for an offshore claim while receiving money in Hong Kong. Because say you have a digital business, right? Most businesses are digital right now. So you pay 0 taxes in Hong Kong. Money stays in Hong Kong. You don't repatriate taxation. You don't repatriate money in Thailand. So you don't pay taxes in Thailand. Or if you are in Dubai, you can even repatriate money in Dubai, But since Dubai is tax-free for physical people, you will have a zero tax-free life, and you did everything legal. So sometimes it's about the choice of where you want to stay. I'm not saying that you need to base your life. I'm not as strict on taxation. I kind of, let's say, put in a matrix the best places versus tax to live. So it's like if you have lifestyle, quality, and tax rate, for me, it's a factor, definitely. I'm not saying that everyone should do that, but at least take it into consideration, okay? Because that affects your life standards, you know? As much as money is not everything in life, but, you know, we are planning for the future. Planning for the future means maximizing your earning in a legal way. Why do not I set up my company somewhere that will allow my earnings to be higher, my valuation to be higher as well? Because when I'm going to sell the company, if I'm going to sell the company, or just in terms of pre-money valuation, my company is valuated at future earnings. And this is the rule. Any company is basically the actualization of what the earning would be in the future. And if the earning already starting with 30% less because I have tax, probably something you should think about. Now,
Yeah.
Without bothering you too much on case study, I already covered this and and uh, and um, um, and the evaluation part. Now, what I would say something about ESOP. Okay, what is ESOP? ESOP is employment share option. And basically, it's like a stock option plan. Right? Some founders they actually instead of giving a higher salary, they do a stock option plan as an incentive. Right? The usual method is 4 years plan with 1 year cliff, means that if they leave before 1 year, they get nothing. If they stay at least 1 year, they start being awarded of first year 24 25%, and then proportional. All right. There are a few methods to make it tax effective. Okay. One method is basically awarding the shares at first, let them basically give them the economic right only after the vesting period, right? Or awarding them as it goes. The risk of the normal approach is that in very fast growing companies, the tax effect of exercising your stock option when the vesting period is ended, it might give a tax effect. While the reverse vesting will grant you, all right, will grant you the shares at a lower value, right? And you want to have tax effect later. So as an employee of a startup or as a founder of a fast growing startup, my little trick here is consider the reverse approach to ESOP. This is something that has been used in Silicon Valley for a while. It's quite new here in Asia, but I tell you, it's something that is going to become as common as a safe agreement, which is something that nobody ever seen 10 years ago. So Y Combinator, Silicon Valley are still paving the pace for new answers in the startup world. All right. And then we come to a topic that is very dear to me. If you can go to slide 8, Jamie.
Slide 8.
Yeah, 8. The
This one?
map, yeah, the map of Bitcoins. I'm sure there will be a lot of, even if today is not a crypto specific webinar, I bet you anything that in the demographic of the attendees of this meeting, a good 70% are crypto owners. It's just the demographic. And it's a statistic that I'm running. Even small owners of crypto or Bitcoins or whatever, factoring into tax. So how beautiful this map is. So if say you have a capital gain of 1.5 million US dollar on Bitcoins, and of course, you know the taxation will happen once you liquidate your capital gain. Okay, so when you're selling your Bitcoins, I would carefully choose where to live before I sell my Bitcoins and where I acquire my tax residency. Because if you have a big capital gain, why not going and moving for a while in Hong Kong and being resident there? Or simply, if you have to create a fund, or if you simply want to be exposed in cryptocurrencies, and you want to choose your new destination, and you know that you will be involved in this business in the next 10 years, say, look at this map. So you know that if you want to enjoy France, eat baguette in escargot, croissant in the morning, enjoy lifestyle, you need to pay 30% on your capital gain taxes. That's it. Beautiful Italy, where I'm right now, strictly for holiday. Strictly for holiday. 26%. Not too bad.
Yeah.
Yes, the price to pay to eat pizza. Jamie, come on. You want to enjoy pizza? Pay 26% tax. Or you want to go and suffer living alcohol-free life. No, it's not too alcohol-free, but Dubai definitely will grant you zero taxation. Then if you don't want to trade crypto, there is a place of choice, which is China, where cryptos are banned. So don't even think about that. You cannot do it. But neighbors Hong Kong is definitely the best place to set up anything that is crypto related. Hong Kong, in my view, is going to become the biggest crypto place. Probably it's already in Asia. There's no restriction like Singapore. The ecosystem is very florid. They are the two biggest crypto funds, NFTs, digital art. Is very
The exchanges as well, right?
exchanges as
Exchanges.
well. And I very much believe that Hong Kong will attract more and more. I'm proudly resident of Hong Kong, but I'm not biased in this regard. Hong Kong is not the next place. I start being a little bit older than before, so life quality, it's definitely more important now than before. So I would trade a few points of taxation to live better, not 26%, for God's sake, never. But like I would say, I would trade a 5% for my life quality. So probably Hong Kong is still a place where I would be as a younger professional, but it's a great place to be and start a business. Probably in Asia, probably in the world. To my experience, I mean, they call me now. Probably I might fall into some hubris, but they call me the tax polyglot. Unfortunately, I'm sick for taxation, and I know taxation of 17 jurisdictions. And I can tell you that by my fixation for taxation rules, I can tell you that at all, Hong Kong is definitely number one in terms of ease, in terms of speed, in terms of feasibility of an offshore claim. It's easy to open bank accounts. It's easy to transact, and it's clean. It's not the dirty jurisdiction that once in a while was perceived as, you know. There is restrictions for certain banned activities. They're very careful to certain nationalities, regretfully, because I have a very, very good amount of Russian friends that they run legitimate business, but they're still having problem with opening fiat bank accounts, normal bank accounts, which to me is shocking, because whatever happens at hometown, these people are legitimate business people. They're working hard and they have been restricted. So that's when unbanking comes. That's when Bitcoins, that's when cryptocurrencies, they have even more relevance, you know?
Yeah.
It's very
Yeah, more
important to
decentralized.
see, very good, but it's very important to do CDD, KYC, because you cannot always say who's good, who's bad. So here, this is the role of the gatekeeper to do a very profound due diligence at first, do a very good KYC, and protect the company and the other clients from the risk of uh, bad people trying to do bad stuff. But again, once the DD is done, on board and support, this is our role as accountant as well. Let's finish with slide 9.
Cool. Maybe
Global,
I'll have to go
yeah.
back through the other ones as well, because I don't think we jumped to those ones earlier. But yeah, please carry on, and then I'll jump back to them just so that we've got them as well on recording for people.
Which one? Sorry.
Because we had, I think you discussed it. We were on 3, and then
I already discussed everything. If
yeah,
you see, it's already discussed in my previous. So I'm
I'll
not
just leave them on
jumping.
for a couple of seconds. Yeah, because we have the recording, and everyone can kind of look back on them as well.
Yeah,
For
yeah,
the text part, obviously, I'm sure they're listening as well, but you never know
yeah.
if there's a point that might be missed. So here's a case
No.
study.
You didn't miss anything. It's good. I already made the cases, so it's pretty easy. So let's go 1 second to slide 9. Yeah,
Yeah,
I want to make a very actionable checklist, easy for you to understand. So you choose your base. In my opinion, Hong Kong and Singapore would be fantastic. Then you structure your income and operation. Very important to understand what is the business model, because in case of an offshore claim, you will need to explain what you're doing, okay, to achieve best tax status. Uh, Understanding tax residency and permanent establishment risk. What do I mean? I mean, even if set up a company in Hong Kong and I live in a high tax jurisdiction, I might be attracting tax in that high tax jurisdiction. So we need to plan properly what is called PE, which is permanent establishment. Okay. If that's an interesting nuance, decide to go to Thailand, for example, or other jurisdiction that allow to work from there, for example, you need to be sorted with a visa. Okay. Because you cannot just go there and it's like, okay, now I work from Thailand. No, in Thailand, for example, there is the visa called Digital Nomad Visa, or DTV. It means that you can work employed by a Hong Kong company. So if you have a company in Hong Kong, the Hong Kong company can employ you and you can work legally in Thailand without sneaking in the custom for 3 months or 1 month and then be busted because you're working from a coffee shop. We don't like that. Get your visa sorted, right? And again, this is recurrent. Lifestyle, important. Business efficiency as well important. So try to factor in both sides of things. And if you are in a stage of your life where business is more important than lifestyle, you're maybe single or you're still looking for your home base, maybe go more aggressive on a more aggressive jurisdiction, lower tax, and more business friendly. If you have kids, you're relocating, you can factor in some other things. Uh, I've seen many people relocating to Thailand. Thailand, it's really a place of choice because there is a big entrepreneurial community moving to Thailand right now. Thailand has been very welcoming to that. It's also a beautiful place and is very connected, very high tech. and it's really welcoming a lot of entrepreneurs and forward thinkers, entrepreneurs, crypto holders as well. In my opinion, Bali has lost a little bit the luster of the previous years. It's beautiful, spiritual in the streets. Thailand, to me, it's more pragmatic, but this is, of course, my take. And tax rules are clearer. There is tax rules that people enforce. So I would say that a perfect middle class entrepreneur with, say, one kid, it will have a company in Hong Kong, spend a good amount of time in Hong Kong, but having a home base in Thailand with a DTV, it will be something interesting for a setting in Asia. You can do different combination, for example, Singapore and Malaysia, or others, but relative to Asia, I think that would be the best combination. Of course, I'm very
Stefano,
happy. Please.
sorry, I was just going to ask a question on that because I think just so I mean, it might be what other people are thinking, but just so I've got my head right on this as well. So in that example, they would set up the entity in Hong Kong where the business is, and they have to
Yeah.
be there for a month in a year. Is that right?
No,
And then
not necessarily. Not necessarily. It doesn't really matter the amount of time that you stay there. All right.
okay,
Because even if you stay there zero, okay, you can apply an offshore claim. That means the administrator is not in Hong Kong, which goes to the advantage of the fact that you pay zero taxes. All right. The taxes will be paid, for example, if you live in Thailand, in the moment that you repatriate your taxes, right? And you will pay, say, 20% on whatever you bring back to Thailand. But if you bring back zero to Thailand, there will be no need. See what I mean? Of paying
yeah,
taxes.
that was what I was trying to get my head around. I was trying to think in that instance if the company was set in Hong Kong, the revenue was received in Hong Kong, but you are physically in Thailand in that sense on that visa.
Yeah,
I guess you
you
would.
will be paying taxes only in Thailand because there is also a double taxation agreement with Hong Kong. So pay
Mhm.
taxes in Thailand, you don't pay taxes in Hong Kong, basically. So in Hong Kong, you can
Okay.
have an offshore claim zero. If you live in Hong Kong and you say, I have my establishment in Hong Kong, my kids go to school in Hong Kong, whatever, I would pay taxes in Hong Kong. And it would be 8.25% on the first 2 million Hong Kong dollars.
Yeah. Got you. Okay. All right. No, I think that's a bit clearer. Yeah, I'm just curious about that. I lived in Hong Kong for 6 years myself, so I'm also very fond of the
Yeah.
city. Fantastic place, and very business friendly in that sense as well.
I don't know, Jamie.
Always
When did you live in Hong Kong?
between 2015 and 2021. Yeah, so
We might have bumped up into each other. Where you were
very
working? What
possible.
place?
Very possible. Yeah, I was where was I based? I was in Wan Chai for most of the
Okay.
time, and then we were for a little while we were in Causeway Base a little bit further. But I lived
Nice.
around Sheung and Kennedy Town, so I was on the west side of Hong Kong Island. But I'd
Yeah, our
do
office
many
is in
many.
our office is in Shenyang, but when I start having kids, we move to Discovery Bay, which is another thing. I mean, another
Yeah,
interesting thing of Hong Kong is that even within Hong Kong, you can find quality of life, a little bit like Singapore. I mean, Hong Kong is not just chaos as people
yeah,
envision. Of course, Shenzhen and Wan Chai is, but DB, Tuen Mun, they are a little bit like Singapore, I would say.
yeah.
Uh,
That's fair.
Definitely, if you're in finance, Singapore is absolutely fantastic. Price wise, it's coming a little bit through the roof these days, but still, it's an amazing place to do business, and definitely for fundraise Singapore, subtracting like family offices from all over the world. And it's also a little bit diverse in terms of nationality. While Hong Kong, if you are fundraising in Hong Kong, talking to founders, uh, they are more traditional approach while in Singapore there is a little bit more diversity. So you might encounter like, I don't know, like more Americans, for example, living there, more Northern European living there. There's a big community from Rocket Internet venturing in Singapore. So yeah, while Hong Kong it's still, I would say, Chinese money, which is all right, I'm totally fine with it. Many are second generation coming back and investing. So we're gonna see quite a bit of funding activity and capital raising activities in Hong Kong and Singapore in the next few years, especially with the interest rates going like lower. I am pretty bullish on there will be selection of good and bad startups or entrepreneurial activities, but Hong Kong is really pushing with Cyberport, with HKSTP, Hong Kong Science and Technology Park, even fund projects. So they are doing matching programs. So if you find that investors, the government is putting like the rest of the money. So yeah, that's it.
Brilliant.
Any other questions from anyone?
Yeah, well, just to remind everybody, if you want to add a question, you can either click the Q&A button and pop your question in there or drop it in the chat, either way. I had another couple of questions. I think one of them was leading on from what you just mentioned, Stefano, as well, because I think what we hear, because obviously we work with a lot of founders of businesses in the region, and one of the feedbacks I've heard in recent times is that for them to raise investment, it's almost required now for I guess maybe think about maybe accelerators and VCs and those types of businesses that they have to have a Singapore entity. So I wondered, like, from your point of view, given that you work across many markets in that sense, is it the case that Hong Kong, there's still a good appetite to raise funds if they are headquartered there in that sense? But I know you mentioned about the profile being a bit different, but in that sense, is it still, it's not going to hinder you, I guess, raising funds if you don't have a Singapore entity versus having a Hong Kong one, from your point of view?
I think it's quite the opposite. I don't know who's giving you this information of the Singapore entity. Setting up a Singapore company, it's 2 times more expensive than setting up a Hong Kong company. Opening the bank account is 2 times as slow. Definitely, Singapore, as I said, has its appeal. If you need to raise money from Singaporean resident, so if you're raising money from Singaporean resident, go for the Singaporean company. If you need to raise money from anywhere else in the world, go for Hong Kong. Don't waste money in Singapore. Simply, they are the same. They are 2 boxes, guys. I mean, and people will come and tell me, but what happened in 2046 when the Chinese come? Nothing is gonna happen. Hong Kong is protected. You know, I don't want to talk about politics, but China has all the interest to keep Hong Kong the way it is, because Chinese are the first clients of the Hong Kong SAR jurisdiction.
Yeah.
So Hong Kong is ultra protected. And my take is, setting up and running a company in Singapore, it would come to 5,000 Singapore dollar. Hong Kong would be half. But again, if your investors are from Singapore, yes, you need to have a Singapore company. It would be better, simply, for DD, for KYC, etc. But if you're getting money from anywhere else in the world, it wouldn't make sense doing Singapore versus Hong Kong.
And then what about the UAE? Because I know we work together on some of those projects as well. I'm speaking to more Singapore-based founders who are wanting to tap into the Middle East and that side of things.
Unless it's strictly necessary and you need to open something there, only for 2 reasons, Jamie. Only for 2 essential reasons. One, you need to get a crypto license. So go to EMCC, fine, good. Or you need to serve the Dubai market itself, not Qatar, not
Saudi,
Dubai. You need to open a frigging shop and you need to serve Dubai. You need to sell Dubai chocolate in Dubai.
Yeah.
Open a company in Dubai. If you're using it as an offshore jurisdiction, I'll curse you. It makes no sense.
Okay.
Cost 10 times more than Hong Kong. It's difficult. Opening a bank account is, and I have an office there, so I'm agnostic. I'd make more money on you if you open in Dubai, but it's just gonna be a nightmare, and you will end up hating me. So unless it's strictly necessary to open in Dubai for the reason that I told you, which is getting a crypto license, because Dubai is very advanced in terms of crypto regulation, which is great, or you need to serve the market of Dubai, which is entirely possible. It's a rich market. You want to go there, you want to open something there, and you want to serve the Dubai market, go for it. But if your business is SaaS, e-commerce, whatever, don't waste your time. Hong Kong,
Yeah.
flat out, cheap, make the deal done, reputable. What else? I'm 100% confident of that.
Oh, that's good. Okay, that's really helpful feedback. I think I think well we have a few people on in the session that are founders maybe based in Singapore and they might be thinking about Hong Kong now, you know, in that sense. So let's see how that
Well, I
develops.
mean,
But
it's different jurisdiction for different things that you're looking for.
yeah, of course. Yeah. Yeah. So I guess the question I was also going to ask, the last one maybe before we jump to any audience questions was what tips would you give somebody who's a Singapore founder? So they've got their Singapore entity. How can they be more sort of tax efficient in that sense? Like, are there like other, you know, you shared a few kind of hacks and things like that earlier on, or pro tips in that regard. Like, is there anything that comes top of mind for a
Well, look,
Singapore-based founder right now?
Singapore is already quite tax convenient, tax free. On the expense management, I see many mistakes of founders that don't keep a track of expenses. So if you are a solo founder, your personal expense, since you're a founder, basically all your efforts are going to your company.
Mm,
So I would say that you can expense many of the expenses that you are having if you justify. But life of a founder is living to create connection to get business. So technically, even if you go out for dinner with your clients, you can expense that. Other than that, if you live in Singapore, it's already quite tax convenient. So I would say that the allowance and everything, there is nothing much you can do legally, right? Except
so,
for planning your salary so that if you are a founder and you get yourself a salary, if this is allowed, give yourself a salary that is in the lower bracket than the company tax salary. See what I mean? So if the company
mhm,
tax is at 8 and you can stay at 4, give yourself 4, you're saving 4. But that's not big amount of money, right? But
yeah,
again, this is tax strategy that you can apply. It's not huge. It's not huge because in Singapore taxation is not huge. If you ask me the same question in Italy, I can write a book on how to maximize taxation
yeah,
because the range is so wide. You know, when you go to 0.26% to 30% to 40%, you better plan a little bit in advance. You know what I
yeah.
mean?
Yeah, but I mean, even that point you just mentioned about the expense management, I think there's probably a portion of founders. I'm sure if I asked all the founders in the Do So network as well, some of them would say, "Oh, I don't, you know, I'm not diligent in terms of doing that side of things." So I think that alone could be a really good tip that people could think about. And then I guess like is there any guide somewhere that says like how you can justify some of these things? I know you mentioned an example, like if you were going for dinner and if it was for a business purpose in that
Look,
sense, like
you
is
need
there
to
like a kind of
remember
a thing?
the golden rule is you can expense whatever you spend so that you can produce revenue with the expenses that you had. If you think that even a yoga class might rejuvenate your mental ability and you can demonstrate that, go for it. Might be a little bit far-fetched, but I'm
Yeah.
giving you exactly this. But if I'm buying a dinner for my team and my team is happy, I can put on the company expense, right? If I'm
Yeah.
buying yoga pants for my wife, it's probably not. But if I buy yoga pants so that my wife goes to yoga, so that my wife is a better person and I can do a better work, probably yes. But again, explaining this to the IRS might be a little bit complicated.
Yeah, fair enough, fair enough. No, but I mean, I think even just the way you broke that down, I think it makes it a bit clearer, and hopefully, those on the call and those tuning in afterwards will have the video up on YouTube later as well. Can take those nuggets because yeah, like all of these things help. I think at the beginning of the call you mentioned that in some jurisdictions it can be as much as 30-40%. If you're a founder and
Mm,
you're getting started and you're trying to build your business, let alone before you've even fundraised, like all that revenue makes a difference. So the fact if you're already
mm.
stunted by huge sort of like outlays on those things, then it's just going to make it slower and harder for you. And we see the statistics of was it 8 or 9 or 10 out of every 10 startups fail, and that's a number of reasons. But if you don't want it to be the reason because of that, in that sense, like if it's other reasons, like maybe you don't have a competitive enough service or something like that, then that's another uh, tactic that you need to deploy. But for this,
Yeah,
at least you can use this information and
correct.
benefit from that. Great stuff. Okay. Any questions from anybody? Because we're getting near the end of time now. Or does
Yeah,
anyone
and
want to?
if there are any question, they can always direct me into via like email. Be very happy.
I might pick on a couple of people because we've got a bit of time. They're probably thinking I might anyway because I can see a few people in here who are founders. I'm aware of them. So I'm uh, I'm gonna nudge you first, Danielle, and then I'll come to somebody else. So maybe if you just want to share your point of view, because I know you've recently started your own business, you were previously in a corporate environment. Like, how are you finding that in that sense with regards to what the topic was today? Are there any questions you've got or thoughts on that, given that you've set up I think your entity set up here, right?
Oh, thank you. Yeah, I hope it's me you're referring to, Jamie. I don't know how many
Yes.
Danielles are on this call. Hi, and thanks for this. It was very interesting. Yeah, I'm set up in Singapore, but I think I have the fortunate situation since I'm both a Singapore and Hong Kong PR that I had the luxury of choice. So some of those benefits spoken about today might not necessarily apply to me. Um, since I had that luxury already.
Yeah.
But yeah, I found the process very, very easy. Having come from European bureaucracy, it just felt like, opening a virtual bank account, really. So I thought my experience opening the business here in Singapore was as easy as it could get, from my perspective, anyway.
Yeah,
Great. And
yeah. If you compare it to Europe, Danielle, it's
Mm,
definitely. But and you are very fortunate because of your status. But if
mm,
your status is not as yours, opening in Singapore might be slightly challenging because if you don't have a local bank, local director, and you
yeah.
are not a PR in Singapore, there would be no choice unless you use a nominee director, which is not a very
Mm,
legal practice, I would say.
yeah. No, and I
And
think,
many people do it, but I
mm,
don't think it's right. I mean, it's rather like you know Singapore. We don't want to bend rules, and directors need to have eyes on the business. There recently a case of a service provider, I don't want to name names, but apparently there was a taxi driver that was nominee director for like 56 companies, and that
wow,
gives you the limitation of yeah. Um, you can Google it, taxi driver nominee director, and you
I'm gonna look
so.
that one up. Yeah, yeah,
But,
yeah.
but the crazy thing is
mm,
why that happened is because Singapore is imposing stringent rules on certain actions. So while in Hong Kong there is none of this, you might agree or not, it's called financial freedom. I think that we should go towards legality of people running a business rather than nationality, but that's very much my opinion. I think we will trend towards that direction very soon. Once I know that this I mean, with a distributed work environment, it would be stupid to link directorship to nationality. In an environment where people working from anywhere, why I cannot choose Singapore as a jurisdiction if I live somewhere else? The world should be a big tax jurisdiction in my futuristic view of how it should work. Probably that will happen in 3 generations from now. Hopefully will.
Yeah, yeah. That's why you're the vision officer, right? So we bring this vision to the world, and hopefully, hopefully we
will
see it.
come.
Yeah,
It will come, guys. It will come. It will come. I think that borders of planet Earth will shade more and more and more. Anyway, it's just my Italian mood that brings me to go for deeper thoughts.
no, I love it. It's good. It's good. That's what we want, right? We want. And Danielle, sorry, I think you were going to say something else, or
Yeah, no, I just want to say thank you for this. My interest was mainly lifestyle driven, as some of the points mentioned, to see, how could I
Come to
set
see
up.
me in Thailand, Danielle. I have a
Yeah,
beautiful resort
exactly.
there. We do yoga. Check Kapohala, Samui, and you will see where all the coolest. We done a crypto summit. I had like so many cool people coming over. We had a lot of fun, and
Sounds good.
and
DTV.
I shake cocktails all night after the crypto summit.
I'm counting on it. Sounds good.
Brilliant. Thanks, Danielle. And then just the other person I was going to jump on was Rosie. I know you joined us, and you've got your wellness business as well. So I'd love to hear your point of view as well as another business owner. And I know you're in the process of scaling, so I'll just nudge you as well.
Hi, Jamie.
Hi, Rosie.
So honestly, this is all quite new, which is why I'm really grateful to be here and to be very much kind of learning about these areas, because it's really key in scaling, and also based in Sri Lanka. So I'm kind of looking at these areas with Asian company also. So it's super interesting, and it's all very fresh. So no questions necessarily from my side. I'm just really appreciating taking it in.
Oh, no
No
worries.
problem.
No, I think
You're living in Sri Lanka,
Yeah, I am. Thank you
and
so
you have
much
a
for what you've shared.
and you have a company in Singapore.
No, in Sri Lanka.
Okay, that makes
Yeah.
it easier.
Exactly. But yeah, it's always great to receive the knowledge and the information. It's really helpful.
And
yeah, Sri
good.
Lanka, fantastic place with yeah, as you probably know, Rosie, Yassas is originally from Sri Lanka as well. So he'll be hosting the session tomorrow as well. I don't know if you're joining that one, but
Yes,
very welcome
absolutely.
to join along on that one as well. I think yeah, so we're really excited. I think good session with everybody. I think covered quite a lot of ground. Sorry on my part as well. Like I should have been managing the slides a little bit more, but all the slides are there in the recording. If somebody wants
Yeah,
maybe
it's
a copy
fine.
of the slides, you can email us and we'll send that to you as well if you'd like. As long as Stefano's okay with that, I think it should be okay, right, Stefano? I don't think there's anything
Of
of a sensitive
course.
nature in there. And of course, yeah, please do follow
Yeah,
up.
and
Like,
if you have guys, if you have any questions or anything, like August is beautiful because I have nothing to do or nothing much to do. My kids are grown up. I am in a very boring holiday, so entertain me with difficult question on taxation. I'll be very happy to answer.
great stuff. Yeah. Just take him up on that for sure. And thanks again, Stefano, for your time. Really appreciate it. Obviously, like wealth
Absolutely.
and knowledge, and love to go deeper on some of these things, I'm sure. And as I said, we'll definitely set up another session to talk around around your other projects that you're doing as well, because I think there's a fantastic that's another whole other great topic for another day.
Fantastic. Thank you so much.
Hey, Stefano. Thanks everyone for joining. See you
Bye.
on the next one.
Bye.
Bye.
Bye.